Luke Beckman from Central Valley Ag is our corn and soybean market analyst this week. The USDA's quarterly grain stocks report showed corn and soybean stocks on September 1st were significantly higher than a year ago, but not far off from trade estimates. The agency tallied corn in all positions 41% higher than September 2014 and soybeans in all positions 108% higher. Nebraska's corn stocks were estimated 29% above a year ago. Soybean stocks were more than twice as much. We talked with Luke at CVA's facility near Tamora, Nebraska Thursday afternoon and started by asking for his thoughts on the USDA's estimates.
Well, the bean number was good to see. Last year's crop size come down a little bit. Really no surprises that it did, though. You know, disappearance during that fourth quarter was up considerably from a year earlier. So the USDA goes back. They were kind of forecasting this with higher residual use throughout the year, but we do go back and lower last year's crop size by 42 million bushels. That's coming from a reduction in harvest acres, and they did pull the yield down from last year by 0.3 bushels. So the trade was not too surprised. Does it have any long-term implications? Not really. We're really just staring at a big crop coming at us, and that's what's dictating market direction right now.
Let's talk about usage and focus on corn first for livestock feed and for ethanol. What does it show us how we're eating up the corn crop?
Well, the stocks report basically implied that, disappearance over that fourth quarter was certainly up, and feed usage really over the third and fourth quarters up 28 to 29%. So on-feed numbers were higher in cattle and hogs at the start of that fourth quarter. Broiler hatch, those numbers up as well, kind of as we get through the bird flu. So there's a lot of animals on feed right now, and I think that really that gives us kind of a good conversation as we get into the first quarter of 2015-16 marketing year, because if the fourth quarter was robust, you could expect that first quarter feed demand is going to be pretty good here for 15-16.
For soybean demand, tell me where exports have been and where you might see them going.
They've been a struggle.
Yeah.
Now, 2014-15, soybean exports just kind of ballooned on us. They continued to grow every single time we saw the USDA numbers, but this past year it's been a struggle. We're down about 30% from where we were a year ago as far as pace on sales. Now, China did step in a week ago. They did their ceremonial purchase, but it doesn't change the fact that there's available beans in South America, and really the currency discrepancies between what's going on with the Brazilian real and the US dollar, it's kind of hurting us as well. So not a lot of bright prospects for exports matching what we did a year ago.
You hinted at the big crop. What are you hearing for harvest results?
Really good in our locale. I mean, we've had really good bean yields early that have come out. We're just kind of getting started with, the weather and what it's doing. It's creating some challenges, but bean yields have been very good. A lot of wet corn to feedlots and some of those early numbers coming out really give us an indication that we've got a good crop in Nebraska and the Western Corn Belt in general.
Do you anticipate the USDA will make any significant changes in next Friday's USDA crop report?
That's kind of the big question, is are we going to see yield adjustments from the USDA, any changes in the harvested acreage? A lot of people are trying to speculate, where are we going to go with that? If you had to guess, the trade certainly thinks that corn yield will work lower at some point, and the bean yield's probably going to work higher. So those are going to be the expectations coming in. Whether we get them in October or November or even January is kind of yet to be seen, but they'll have an opportunity next Friday.
Let's look at selling strategies. First, for this crop that's in the field right now, so that would be technically the old crop for corn and soybeans.
Well, on the old crop corn, really we're looking at an opportunity to get back to $4 on the December futures. Corn, the downside feels limited like we had discussed, but I really don't think it has a tremendous amount of upside, just because demand will be a little bit questioned as we step into these reports. So it feels like tight trading ranges are going to be pretty common in old crop corn. So look to sell if we can get December up to $4 futures. If you can store that crop, sell some stuff further out to lock in good carries.
And in soybeans?
Old crop soybeans, trying to buy some time right now. Certainly the prospects aren't real rosy, but if we could get back up to the charts, there's some significant resistance at 923, 925 on November futures. If we can get up to that level, that's probably a spot to look at letting some of your harvest soybeans go.
And do you like anything in 2016? Or are you starting to think about things for 2016?
We'd certainly like to, but with where those numbers are at, it's hard to get too excited. Let's see what develops out of South America this spring as their crop is coming out of the field. If we could get to 9 1/4 off of Nova of 2016, we could sure take a look at some early sales.